We received some pretty big news last week. In fact, I would say very big news. One of the world's largest asset managers last week finally sort of released in some shape or form what they think is an appropriate percentage-wise allocation to Bitcoin, or the IBIT ETF, at least that's how I look at it. I'll get to that in a minute, but first let's understand how volatile this asset actually is. What I have here is two lines, two-panel chart, top and bottom. But at the top, you have the price chart of Bitcoin since its inception in 2011. At the bottom, it's the volatility. Basically, historical volatility. Initially, for the first 3 years, the volatility ranged from crazy, like 200%, to almost nothing, like down in the 20s. You can see what's been happening. We haven't necessarily made lower lows, like Bitcoin doesn't really go much below 20 in terms of vol, but we're certainly making lower highs. So if you look at this here, you can see we're making lower highs. So Bitcoin, at least for the time being, has become less volatile. Nevertheless, it remains pretty volatile. If I take the average volatility of the past couple of years, it still has a vol of somewhere between 40 and 50. It would be my guess. Maybe it's a touch less. Maybe it's 45. Something like that, 40 or 50. That's still a decently volatile asset, although certainly, again, as I said, less volatile than it was, although we didn't have to go back far, literally 2021 that had 100 vol. So again, I don't think we're out of the woods yet in terms of volatility here, but that's also why the next point here is very important. So if we now look at this and see what the world's, or one of the world's largest asset managers sort of talked about in terms of allocation to this percentage-wise, we're coming to an interesting number. So first of all, the company who wrote this is BlackRock, one of the world's largest asset managers. And what you can see here, what they're saying is that in a sort of traditional portfolio mix of 60-40, 60% stock, 60% fixed income or bonds, what they're saying is that a 1 to 2% allocation to Bitcoin, they're saying this in a bit of a different way, but that's where basically they're alluding to, is kind of where they think that's reasonable. In fact, they say it in the next sentence, we think that's a reasonable range for a Bitcoin exposure. In other words, to put and I'm saying this because I know a lot of people are way above that threshold. Everyone's got to do their own thing, of course. But in a $100,000 portfolio, that means basically $1,000 to $2,000 of exposure to Bitcoin, right? Because of its volatility. Not because there's no upside, but because of its volatility. So just wanted to give you some perspective. Hope it helps. See you in the next video.